Hey traders, welcome to another video. We're first going to be looking at the S&P 500. Thanks for tuning in, and hopefully everyone's having a good weekend. I'd like to look at the weekly here to start off on kind of the major 500 companies of the United States, looking at this expanding wedge formation that we've been seeing since 2018. We saw a series of lower lows, as we can see right here, as well as higher highs, forming a nice expanding wedge. A lot of people were thinking that it was going to be a bearish push after this consolidation around 3,500 with the resistance around that zone. We did actually inevitably break, move to the upside, and on the monthly, it's pretty evident as well. If we see a series of higher highs, and then we see a break, pullback, validating the previous resistances, a new level of support in confluence with the ascending resistance, and then you're getting your next push to the upside. So if you are looking at this as a breakout and a continuational move to the upside, we're going to be looking at this potential size of the pattern, similar to if you're looking at a descending wedge, you'd be looking at the size of the opening. This would be before the breakout. What's the kind of biggest move to look at the potential target that we're looking at here? So right now for the S&P, we're looking at around 4780 to 4800 is around the target that we're going to be looking at for the S&P 500 here. We'll look at the Dow Jones a little bit. We have a similar type of structure. The Nasdaq actually does not have this exact structure, so the Dow Jones and the S&P do look a lot stronger in terms of the overall structure, but the Nasdaq is doing really well because the tech sector is really hot. So that's going to be my overall bullish view and the reason on a large time frame. Then we go into a smaller time frame, we can kind of understand what happened during the break. We're getting a lot of expansions and volatility, which isn't fantastic. Ideally you want contractions to then form the next expansionary phase to push you to the upside. But we did get, if we get our picture right here to discuss what happened, hopefully everyone understands that this is the previous resistance that was holding the price from making a major significant high, and then we saw a break right here where we saw resistance. This was a structure that we were talking about. It inevitably broke above it, and then we started seeing our expansion pattern from here. So we see a series of higher highs, as we can see, forming a nice resistance zone, and then we were seeing a nice series of lower highs like so. And then since this expanding wedge right here, we've been looking bullish, and it has been very lucrative for us, really, in short. Looking at altcoins, looking at BTC, it has been a really good run. But overall, we have been seeing a little bit of hesitation with BTC kind of recently, obviously, within the dip, kind of forming like a banana type of structure like so, where you are initially seeing these nice higher highs and higher lows, but it's kind of fizzling out. And what I'm expecting for BTC and the S&P is a little bit of a dip to the downside and then another move to the upside. So we're going to be looking at BTC kind of like this. This is what it's seeing right now, where you can form this nice ascending zone, and then that would be a wedge, and it did break below the wedge right here. And what I think is we're going to see a little bit of hesitation to go deeper into the S&P right here. We're going to see some sort of structure that's going to be setting up, because we had a nice structure set up right here, squeezing towards this major level of support. The price either has two options to start breaking down to the downside right here, breaking this major level of demand, or break this resistance and then push to the upside and then potentially retest this series of higher highs, and that's exactly what happened. So at this point, we just had our impulsive push to the upside for the S&P. Really good run from around here to here, and I think we're going to be now holding, maybe consolidating, doing something that's going to be looking at like a contraction of volatility, hopefully, before the next push to the upside. So that's going to be my overall view for the S&P. The target is quite a bit higher, so there's, in my opinion, more room for the bulls to push the price. Now, there have been talks about tax increases in not just a corporate realm, but individual income tax as well. But these are just rumors. Nothing has been passed yet, so I don't think that it's going to be impacting the market too much. Now, if something does get passed, that is going to impact the market, in my opinion. Obviously, with increasing tax in the corporate world, there's going to be less profits. There's going to be less bullishness overall, because people are going to be more restricted to having less cash flow coming in due to, obviously, taxes. So going to be looking at that. Definitely keep that in mind, but as of right now, it's just rumors. So in my opinion, we're going to be doing something in a form of some structure, and then BTC, where it's going to be like this, kind of creating a nice, I guess you could say, banana shape. There has been talks about a banana shape on the Discord, hence why I'm talking about that. I think there's going to be a slight, while this is contracting and setting up, there's going to be we're already seeing a little bit of a dip, but a little bit further of a dip. And this, in my opinion, is where a lot of weak hands are going to get taken out of the market before our next move to the downside. Now, this bearish push is, I think, going to be a little bit more aggressive, and I think that's what we're seeing right now. But in my opinion, we're seeing a nice wedge formation after the bearish push because we're still macro bulls. We're looking for continuation patterns, right? We're seeing a nice push. We're seeing a little bit of an arc. We're going to see a little bit of a dip, which is what we're seeing right now in BTC. The S&P is going to take a little bit of a breath, which is not too bad because it has been super bullish. Let's say it's going to like hold something like this, dip down, and come to the upside. So we're looking for this breakout to be ideally in confluence with this breakout. That would be the optimal situation for us to be in because then we have the most amount of validation. Not always going to be the case, but that's going to be how we're going to be looking at the S&P and BTC. Not going to dive in too far into a smaller time frame here for the S&P 500. We're doing a nice consolidation. Like I said, in my opinion, we just completed a very strong push to the upside. We're going to be looking for a little bit of hesitation and some market breadth, which could mean a little bit of a halt on BTC for the kind of foreseeable future for at least April here. Not too long until we turn into a new month. So that's going to be the S&P 500. We're going to quickly look at the Dow Jones just on the monthly here. Very similar structure overall with an expanding formation. If you did not know, the DJI, the Dow Jones Industrial Average, or Index, sorry, does go all the way back to like early 19 or even 1800s. 1896, and then this is 1900. Pretty wild, but this is a really good understanding of the overall stock market if you want to have a large perspective. If you want to zoom out and take it back 100 years, this is a really good chart to do it. So, as we can see, this is the Great Depression, kind of around 29 all the way to around 33 was when the market took a massive tumble, and people like Harry Dent, who I somewhat follow just because he's a deflationary kind of guy who is very, very anti-inflationary because he doesn't view inflation to be the worry. He views deflation to be the worry. In my opinion, I think inflation is a little bit more in the worry because overall they're going to be printing money rather than absolutely decimating the stock market by raising taxes, raising interest rates. I don't think they're at that point yet. I think they are still in the mindset of let's just print more money. MMT is still very, very relevant in our world today. So, in my opinion, we're going to be continuing to move to the upside. Now, if they do raise interest rates and corporate taxes increases and there's less bullishness, that could cause a little bit of worry. But at this point right now, I don't think they can raise interest rates because so many businesses would go bankrupt. They would just not be able to pay it. The federal government has so much debt that they can't pay back. So it would be very devastating for a lot of businesses, individuals, and really even emerging markets as well. So we're going to be taking a look at a different chart. Not really going to dive too much deeper into the Dow Jones. Overall, I do think that expanding pattern is going to be hitting around 38,000 for the Dow Jones Industrial Index, and that's going to be my next major target for this particular chart. NASDAQ kind of hovering, not doing super well compared to the compared to the S&P 500 and Dow Jones, but overall, we do see it creating a slightly higher high, and we are holding this very, very strong ascending zone right here. So we had a nice squeeze, this ascending triangle formation right here, which is pretty solid. Took a pretty strong push to the upside. We're hesitating a little bit. I wouldn't be too surprised if we do form something like this, where we get our series of higher lows. Maybe we even retest that once again, and then we get a series of lower highs, creating a nice symmetrical triangle, and you're going to get the next push to the upside, maybe even towards the 15K zone. So that's going to be my view on the NASDAQ. We're now going to be looking at a little bit into the precious metals here, looking at gold and silver, just on a large time frame, brief overview. I do think gold has bottomed finally at around like the 1683 range. Very strong support if you're looking at the monthly, looking back all the way in the 2011 range, which was the previous all-time high there. And if we're looking really at the 3-month range, we do see it's a nice pullback to a major, major level. And that's not going to be absolutely perfect, but we see a nice break, pullback, Not a tremendous amount of sell pressure compared to the buy pressure on the way up, which is absolutely phenomenal to see. And I do think we're going to get our next leg up here. So now going back to the weekly chart, we do see a nice squeeze. There was a little bit of a fake out here, a little bit of a fake out here, but it does look like it is holding really well. So what we're going to be looking for in gold, let's take a picture here, is we see a nice descending zone. This is obviously, if you don't know, a flag formation, so you're looking for a resistance and a support to be pushing down at equal, like parallel against each other, equal angles. This is pretty well lit, and then what you're going to be looking for is a break and retest of a major zone of confluence, where you see the series of lower highs right here, creating a descending trend line, and you also see a previous major level of resistance horizontally, where you're going to be looking for that major zone of confluence. So in my opinion, right now we see this major low, and then if we see a little bit of hesitation right here, we see that as a major level of confluence, and we can also see that with some hesitation back here around the 1786 range, and even back in 2011 we can see that this was a major zone as well. So in my opinion, that's going to be the overall structure that we're going to be looking for. A little bit of hesitation would be nice to see one last time. You get your squeeze right here, and then you're going to see your break. Once it breaks this major level of resistance, you could have multiple strategies to enter. Obviously, it depends on what you're looking for, but at the end of the day, you're looking for that confirmation, breaking this major level of resistance after it's formed a very nice tight structure, contracting the volatility, so it can basically create its next move. This is a very similar structure, what we're seeing right here. Look at this one right here. This is a little bit of a wedge, but you're seeing the initial wedge, you're seeing the ascending triangle, contract the volatility, and then you're seeing your very strong push to the upside. And this was COVID, and then you're seeing that continuation of push to the upside. So that's kind of what we're going to be looking for. Hopefully that gives you a good illustration and example. I think there's still a little bit more that needs to occur before we get our strong push to the upside, but we're really keeping a close eye on gold as well as silver. Silver is looking a little bit better. We talked about this being the bottom at around 24, let's say 60 or 24.50, which in my opinion it has. So let's take a picture and discuss kind of exactly what's happening. So in my view, I think silver is going to be pushing up. You see a nice bottom, and then you're going to be continuing to push to the upside. So that's going to be my overall structure that I'm going to be looking for. So you see this nice push. You see this nice long kind of bottoming formation, this cup formation, and then you're going to be looking maybe even for a pullback right here. But overall, you see a series of lower lows, and then you see that major level of support hold, and then you see a higher low, higher low, higher low, higher low, higher low, forming this nice bottoming formation, similar to what we saw on gold. Gold had a massive push up. This is like 2011, and then you saw basically a massive dip in the market, and this is like 2019. Right here, when it started to break out. Late 2018, 2019 is kind of when it started breaking out right there. So that's going to be a smaller formation on silver here, obviously, compared to gold, but very similar structure. And then this major zone right here at 28 is going to be the zone to break that we do need to see, and this is the bottoming. So we could get a series of lows. I think that this is holding really well, and we're going to be looking for a possible very strong push once it breaks past this 28 range, but we're going to see some more consolidation yet to come, kind of maybe even like for all of May or mid-May we might start breaking out. We're going to be looking for that kind of closer to the spring, kind of going into summer, but as of right now, we're just being patient. This ascending trend line is holding really well, so I'm going to be viewing this something similar to this, and then once we see a break around 28, getting into 30, that's going to be a real opportunity to look for that next strong push to around the 35-36 range. So just trading within the range as of right now. Obviously, I think it's going to continue to move to the upside, because I think kind of going back to the printing of the currency, they are proliferating currency faster than ever before, and silver is at the same price it was at let's see, 2000 and I guess 10, and they've printed a lot more money, let's say. I don't know the number, but a tremendous amount. So that's going to be the quick overall view of gold and silver. We're now going to get a little bit into BTC and some cryptocurrency markets here. Hopefully that gives you a little bit of understanding of where my viewpoint is. I think the gold and silver play is slowly coming into fruition here because it's done really well and it's consolidated. A lot of people are not so patient. They just want it to continue moving to the upside. I think it is really good to have a little bit of market breadth, kind of similar to what we've seen here on BTC, gold, silver. It's just, in my opinion, a really good opportunity to load back up. So looking at BTC, hopefully from talking about the S&P, you have a good understanding of what we were talking about in terms of the break in the ascending wedge to the downside, creating a descending wedge, and then breaking out of that descending wedge to form the next bullish push. So that's going to be the ascending wedge. Hopefully you see it. And this is going to be the descending wedge. Hopefully you see it. What we're going to be looking for is initially a nice ascending wedge. Now you could have initially a blow off top and then it comes back down. Or in this case, we just had it come right back down. And what you're looking for is something similar to this, right? Maybe it kind of dips down a little bit like here, kind of what we saw. There we go. So you're looking for a high, a lower high, a lower high. You need a minimum of 3 rejections for this to be even a valid zone. And then you're going to be looking for the same on the support zone as well. So you got your 1, you got your 2, you got your 3. And also within a wedge, if you don't know what we're always looking for, even in this zone, you can see you got your big 1, you got your big 2, and then you got your big 3. Or your little 3, and then you start to break out. And that's what we're looking for in any wedge formation. To the downside, you're looking for your 1, you're looking for your 2, you're looking for your 3. It may fall below this zone, it may not. If it doesn't, it just means it's that much more bullish. So we're going to be looking for that. So we're going to be 1, 2, 3, and then you connect the lower highs, and you connect the lower lows, and then if it's holding, that's great. If it's not, that's okay. And you're going to be looking to break this previous major level of significance in confluence with a previous key level of significance horizontally. So let's say if it comes out here and it starts looking okay, just breaks it, we're not going to be looking to enter just yet because it could just fall down and retest this zone, and you're going to be looking for this descending zone that's like this. It's a whole other structure that we're going to be looking for if that goes into play. But if we are seeing this kind of break and then hold, maybe you're seeing a nice series of higher lows right here, and then it starts to break this major zone and then retest. That's going to be an opportunity where we're really going to be looking for potential longs in BTC as well as some alts. I think BTC is going to recover first, and then alts will come into play. Ethereum is actually doing really well compared to BTC and a lot of alts, and we'll take a look at that as well. But I think BTC is going to be the one to be to look out for, kind of for this upcoming next big move to the upside. So let's zoom in on a smaller time frame here. That's going to be my overall view on Bitcoin. So let's zoom in here. And this is an indicator that illustrates the average volume of all the major exchanges that retail traders use, as well as the moving average, or I guess you could say the exponential moving average of those on different time frames. So I kind of have an understanding of the relative volume. Very useful. It's on our Trading View platform. It's called Performante Trading. So we see this zone right here, this zone right here, this zone right here, and then ideally it'd be nice to see a little bit of a squeeze and then maybe one last push to form a horizontal zone. It could even go further down. We don't really mind. It's not like I'm shorting this at all. I just wouldn't short in a huge bullish market. Just doesn't make any sense. I'd rather just stay patient, wait, and then look for another opportunity to long. So we're going to be looking at this next potential zone, which is low, higher low, higher low. So you're going to be forming a nice squeeze here. It would be nice to see a nice last dump because you see the 1, you see the 2, and then this is the third final move. It could hold here, or it could dump all the way to around 44K. I don't mind. I'm going to be holding either way, and then looking at potential leveraged opportunities when we do see the inevitable break within this major contraction right here. So we're going to be looking for, let's just do it in white, just so it's a little bit easier. Actually, let's do it in red. Red's a little bit better. Oh, red. There we go. So you see the one big move here. You see another big move here. And then we're contracting. And then I think we're going to see one next little down move here. Either way, if it hits this support and holds or kind of fizzles down here, I don't mind because we're going to be looking for that contraction. But if it kind of depends, because either this one would be the case if you're a little bit more aggressive. If you're a little bit more conservative, I would say this one would be the best fit around the 51K, because you see such a massive level of both resistance and support in the previous time frames. So kind of depends on the level of risk you're taking. Obviously, you could stack, or you could have a little bit of a feeler trade right here, which would be, let's say, 20% of the total amount that you want to have in this trade, and then you can obviously inject more capital as it goes up, because the higher level of confidence you have in conviction and overall confirmation, you're going to be entering at lower or higher levels if you are longing. So that's the thing, obviously, with trading. If you're more speculative, you're able to enter lower, but it's more of a speculation. So we're going to be looking for contraction, but at the end of it, we're going to be breaking this descending trend line inevitably sooner or later. And when that happens, we're going to be looking for a potential push to the upside here. In my opinion, I'm going to be a little bit more conservative, because I already have some more speculative alt plays that are doing really well. For leverage trading, I just want to be able to capture the meat in the move. So we're going to be looking, in my opinion, for the break in around 51K. We could be forming like head and shoulders like so, because we see a nice potential left shoulder right here, and then we could see a right shoulder kind of breaking out of the wedge, coming to the 51K zone, holding, coming back down. Weak hands are just not able to hold it. You get a slight pull back to form a very, very beautiful reverse head and shoulders, and then you're going to be breaking out of the 51K super bullish, kind of like we saw right here. This was the wedge, this was the wedge. You saw a break and then a rejection, but what did you get? You did see a higher low from this low, and then you saw a reverse head and shoulders, and then you hit your target of the reverse head and shoulders, as well as in confluence with a nice ascending zone right here. So that was a great structure that we were able to play through right here, and I think this is potentially something that we could see in this upcoming future here. So that's going to be what we're going to be looking for. Unless something changes, we're just going to be continuing to look for that exact same structure. Not really going to be playing around in this zone because it's too choppy. I'm just going to be waiting patiently until we see a little bit more clarity within this zone right here, where we can look for opportunities to enter long. Now we're going to be looking at the BTC.D chart really quickly, and then we're going to be looking at Ethereum. So if you don't know, this is the Bitcoin dominance chart. Shows you the dominance of Bitcoin compared to the overall cryptocurrencies in terms of market cap. And as of right now, Bitcoin is just barely holding on to the 50% market cap, which means if you're adding up every single project calculated by TradingView, it's not going to cover every single one like in existence. I'm sure it has like some database or some amount of coins that it calculates in terms of market cap, but it counts all the major ones and adds them all up in terms of market cap. And BTC is 51% of that, which is still a significant amount. But in major bull runs, like we saw in 2017 right here, altcoins absolutely roar because people are very speculative, the hype is real, people are making money in asset classes or assets and then moving that profit into different smaller market cap tokens, which are then moving up. Like if BTC is someone's significant holdings, they might sell a little bit after it went from 10K to 60K and then buy some more speculative assets with it. And then that's kind of, if you're looking at a broader ecosystem level, it's obviously going to be making an impact on the BTC dominance chart. So in my opinion, we are going to be seeing a further downside move for the Bitcoin dominance chart, similar to what we saw in 2017. We've been talking about this for a super long time. We should be in alts. At the end of the day, I think Bitcoin is something that we should always hold it, like in terms of a safe haven asset storage of wealth. I think it's really important. But in a very, very speculative bull market like we're seeing right now, having a little bit of a overposition in alts compared to BTC is not the worst in my opinion, because alts have been doing very well. Right now they are hesitating, or at least the major ones right now. But it's a good time, in my opinion, to be stacking, because I think that the bull run is still having a lot of leg left in terms of the overall bullish push to the upside. So, quick look at the alts right here. We can see a lot of them are just hesitating, right? Look at XRP making a massive move to the downside here. And a lot of alts, BNB's quite aggressive, but we can see a lot of alts are kind of just consolidating, contracting, not really doing a whole lot, which is not necessarily a bad thing if you're looking at a broader perspective, how far we've come. Maybe we should take BNB out of it, because since September of 2020, it's gone up over 2,100%, which is pretty unbelievable, but obviously there are going to be outliers in the market. So now let's quickly look at Ethereum. which in my opinion still looks pretty strong compared to many of the other altcoins. So let's just take this out because we're not really looking at that anymore. So if we are looking at this in terms of just a continuational push to the upside, we can see this zone clearly, this symmetrical triangle zone right here. This ascending zone right here created a nice symmetrical triangle. We saw a bullish push initially push the price above this major zone of confluence. We can see that right here, right? This major zone of confluence, and now we saw this consolidation, very, very significant, really great opportunity for entries within this consolidation. We saw a bullish push the price above this zone, a pullback. BTC had a pretty aggressive pullback here, but Ethereum is holding up way better than Bitcoin right now, in my personal opinion, just looking at it from a technical standpoint. We're still holding the series of higher highs and higher lows because this resistance is now a major level of support, and when we're zooming in, we can see a very, very nice wick to the downside. Let's just keep it on the daily and then take another picture where we see a lot of sell pressure, but the buyers were able to pick it right back up. You see wicks 1 and then 2 and then 3, but the price is not going below this previous major level of resistance, which is really great to see, very promising. So what we're seeing right now, I know that this isn't great to see, big wicks right here, just in terms of the sell pressure, but what we're seeing right now is something similar to this, where we're seeing a nice setup for a next additional push to the upside, in my opinion. So that's going to be what we're going to be looking for. I do think that a little bit of hesitation is a good thing. The fact that Ethereum is holding up while BTC is seeing lower lows and lower highs is very promising for Ethereum on the next push up. I think we're going to be seeing a lot more of an aggressive push for Ethereum since we've been kind of consolidating here for really all of 2021. It seems like almost, compared to what we were seeing in BTC, because we had a massive push when we broke like the 300 range back in October, huge push. But since then, we've been kind of consolidating a little bit more. But I think what we're seeing right now is the change of the overall appreciation in Ethereum. So, you know, we saw a massive push, and then we're seeing a consolidation, and then we're going to see another big push again here. And this is great to see because it's market breadth while still trending up. Usually market breadth is kind of a trend down, you kind of go down, and then you're seeing these nice structures, and then you're going to get a next push up to the upside. But this is still trending to the upside. I think Ethereum is looking very bullish, and in time we're going to be seeing these like 5K, 10K ranges that all these people are throwing out. So at this point right now, I think it's consolidating a little bit. It'd be great to see a nice little descending triangle formation right here, hold up against the 2200 level support, and then the next push up is going to be around, let's say, 2260, 2250, all the way to maybe like 3100 or 3200. So that's going to be my overall direction for Ethereum. I think it's setting up very beautifully. There's a little bit of time that needs to play in terms of the structure that we're going to be looking for before we see a nice opportunity. But that's going to be my overall view on Ethereum, is a little bit of patience, but I think that next push is coming. And Binance Coin is something that we're going to be talking about as well. Look how similar these structures are. You had an initial push to the downside, similar to right here. You're seeing a little bit of a higher, kind of a higher low, higher high than the previous high, but overall you're looking for a larger triangle, right? You're not looking for these quick little triangles that initially break out. You're looking for the larger structures, and this is exactly what we're seeing right now in BNB. What we saw last time, we were breaking like 270, 280, all the way in like the 580, 590 range. Close, we didn't get it out with the 600, but 580 was kind of the target there. So overall, really, really great to see. And what we're seeing right now is another setup on BNB. Also, I know that there's a lot of hate on them, but the shit coins and the poop coins that are coming out, like the Safe Moons and the Elongates and the there's a bunch of them. There's a bunch of them, but most or all of them are actually going to be on the Binance Smart Chain, and that takes BNB. So a lot of people are purchasing BNB in order to actually buy these poop coins, which means that overall, yes, you're going to be selling BNB at a later point, but if you need to exchange back, you're going to be buying BNB. So there's more interactions in buying and selling using Binance Coin because of the Binance Smart Chain. I think that this is really bullish for Binance Coin for this upcoming summer and kind of getting into fall. So this is going to be a coin that we're going to be really looking at. I think $1,000, 2,000, 5,000 is not out of the question, because it's basically $500 right now, let's say, and we're still pretty early in the bull run, in my opinion, at least for the altcoins. Looking at the BTC.D chart, we know what happened in 2017. We know how aggressively bearish it was for the Bitcoin dominance during kind of the most aggressive parts of the bull run in 2017. So I think something similar is going to happen to this current alt season. So hopefully everyone did enjoy the video. If you have any questions, suggestions, definitely don't be afraid to throw them out. We do definitely enjoy making them. We've been making them a little bit less just because we do, as of right now, just look on the larger time frames. We're not really short-term day traders at this point, especially in a bullish run. You know, if you're short-term trading, it's great, but you're going to be missing out a lot of the major gains, like the 2, 5, 10, 20x's. It's really hard to get those if you're just setting targets, using trailing stop losses, because you're going to have these very aggressive pullbacks that will most likely trigger your stop loss if you're going to be setting stop losses. And it's not the most, I would say, it's not the best practice to not set a stop loss on a very speculative asset, but in a very volatile market, sometimes you have to be able to accept the losses, not put a lot in, and just be able to manage risk through your own analysis and manually entering or exiting. So hopefully everyone enjoyed it. Hopefully everyone is staying safe and making some good money in this crazy market. We won't really look at the US dollar today. We always talk about it. I think overall it's bearish. I hope everyone has been keeping an eye on it. Lot of bearishness since the high that we saw on April 1st. I think it's going to continue. It's just a matter of if we're going to be breaking this 89, 88 zone, or if we're going to be potentially double bottoming and then trying to make an attempt to come back to the 92 range. But as of right now, I think it's going to be bearish until we kind of get back to that low that we saw in around the low 89s. So that's going to be that's really going to be it for the overall market analysis. Hopefully everyone enjoyed it, and until next time, have a good one, traders.